brainstorming, that would be extremely helpful. And while we're being joined, so we've set this up as a Zoom meeting, and that was precisely to encourage interaction between and from all of you. We're going to be using a virtual brainstorming tool, which is called GroupMap. And what I'm going to do right now is give you a link in the chat, and I will repeat this so that you can, people that come in a bit late, they will still be able to join in. So sorry, so I need to make sure I send it to all of you, everyone in the meeting, right? In the chat, you'll see that I've put a link, and I'm going to invite you to click on that link, and I'm also going to share my screen with you so that I can talk you through how we're going to structure this brainstorming session. So do please let me know when you're able to access the link, and you should be able to see at that point a screen like mine. Can you see that? If someone could just confirm, you should be able to see a screen that says insurance and long-term savings at the top, right?
We see it, Catherine. It's good. It's good.
Yeah, all good.
About your password. It's asking about your password.
So you should not need a password. It means that you probably used this tool before. I'm wondering.
I'm not sure. Maybe you sent the wrong link, because I got a thing that said please log in as Catherine Pulvermacher. So I'm not
okay,
sure.
Just a second. I'm going to do it like this.
Yeah, I think you need to copy the thing, the link that's under the big numbers. HTTP join. So there is a QR code, and then there is a web address.
Okay, if you could click try clicking the second link. Oh, hang on a second. That will only let you. I'm sorry about this. We have actually. Sukhwinder, I can see that you've joined. I want to be sure that you can not just view, but also contribute.
Yes, I have been able to join. Yes.
Okay, great.
By putting in my email address, I just being able
now
to.
I mean, yeah.
Yes.
I think this one should work.
Yeah.
Okay, but I think I sent a link that was only for viewing. So I just want to be sure that everyone can actually join as a participant. So I can see we have a couple of extra people who've joined. In the chat, welcome to our brainstorming session. In the chat, you'll see that there are some links. If you could click on the last link in the chat to join our virtual brainstorming workspace, that would be great. So if you have already joined, come out of the group map and click on the last link to ensure that you'll be able to share your ideas as well and not just see what other people are doing.
Yeah, I've been able to get in.
You were able to get in. Okay, yeah.
So I came out of that, which was view only, to this workspace. Yes.
Great. Okay, so I can see that we have 8 participants. So that's great. I think everybody is pretty much in here. So that's excellent. If you have any technical problems, then please help me. So the first thing that we're going to do, we're going to go through a structured process of thinking. So the first thing we're going to do is get an idea of, when we use the term long term, what does that actually mean to each of us when we're thinking about savings, right? Does it mean like 2 months? Is it a year? Is it 30 years? So you're now going to have an opportunity. You can see a screen. There's a little post-it sign in the top left-hand corner. I'm going to put the timer on, and I just want you to put, you can put more than one number if you like, okay? But clarify whether it's months or years, right? So I'm going to put the timer on. I'm going to give us 1 minute to complete this exercise, which isn't very, sorry, let me just put the timer on. You won't be able to see what other people are doing, but we will be able to see that in the next stop, in the next step. And you, as I said, if you want to add more than one idea, you just click the little icon. So just tell me when. We'll give it, we've got another 40 seconds to go. Is that working for everyone?
It is. I would just like to remind, I think Rebecca just joined, that in the chat, if you could click on the last link that Catherine shared, so that you can also participate.
Yes, Gilles, you should write in the sticky notes. Exactly. So you'll join, you'll see a screen that says brainstorm. Has everyone had a chance to, I can see Dominic has just joined. I'll give Dominic a chance to add his, I just want to be sure with the simple question as well that it's the tool is working for everyone. So I can see Rebecca is in. Dominic, in the chat, if you could click on the last link that Daniel has posted, you'll be able to join the virtual brainstorm. And the first question is very simple. It's to put down years, months, whatever you think of when you think of the period that we're talking about when we're thinking of long-term savings. How long is long-term? So I'm just going to give Dominic a chance to join us.
Hi, Catherine. This is Gilles here.
Gilles? Yeah.
Yeah. I think we, and I don't want to make that very theoretical. I see faces that I know, Dominic and Azir, and Hans. Hi, Hans. Nice to see you. I think we need to differentiate. Do we answer the question in our name or in the name of the clients that we serve?
No, we're going to move on. So we're at the beginning of this exercise, we're thinking about long-term savings from our own perspective, all right? So what does it mean to us and how do we use it? And from that, we're going to then move on to, let's now translate that and imagine that we are microfinance clients, okay? So this should be from your perspective.
Okay, fair enough.
Dominic, you haven't found the link. And Jacob, you've just joined us, or Jacob. In the chat, you'll see just above where you posted that message, Dominic, there is a link that says join group map. That is the link. And Gilles has indeed reposted it. So Dominic, I can see you're in. I think that we have one idea from everyone. Carl, are you managing to get in? And Dominic, are you in? I can see that you're okay. So everyone has now put in an idea. So we're now going to see what those ideas are. Okay. Just bear with me a second. Right. So I've now moved you into the group stage, and you can see what everyone's ideas were, and you can see that there's quite a variety, right? So from many of them are 5 to 10 years, some of them are 40, and there's even one as low as 2. So we can see that already when we're talking with a very simple term, long term, what we each understand by it is something very, very different, right? And my guess, and open for discussion, my guess is that what governs that is how long it would take you to save up. What is the target of the saving, right? How long is it going to take you to save up that amount of money? It's not going to be something you can save within a year, and definitely not based on 1 month of salary. And in fact, no one has even put 1 year. So we're talking about something that would require a significant and sustained amount of effort. So we're now going to move to the next exercise, which is to start thinking about what you in your own personal capacity would use long-term saving for. So I'm going to bring you over to this map. Hans, you have a question.
I think we should clearly say that we are talking about formal monetary savings, because savings in kind are extremely important. Land and livestock, this land and housing is much more longer time, and there are also informal savings like the Susu or the Roskas. So I mean, so this is only a limited part. In many areas, particularly in rural areas, we are talking about savings. So it could range even, I mean, it's country specific or region specific, but it could be even below 5% of overall savings.
Okay, I think that's an excellent point, and that's definitely something to bear in mind when we get to the third part of the exercise, right? So what I'm trying to do as part of this is also get us to put on the mindset that people who are MFI clients have different access to resources than we do, but oftentimes the needs may actually be quite similar, right? So let's take a moment to think about how in your own life, and it doesn't have to be what you are currently saving for. It could be something that maybe you've had to save for or think about in the past. What are some of the things that you have, the goals that you've had for saving? So in my case, I know that when my kids were in school, I wanted to be sure that they could finish school and that the money was available for them to do that, right? In case something happened to me. So think about all sorts of things, whether it's whatever you think for you could be a goal. And I know there's one answer that's going to be on each of our lists. So I'm going to give you 2 minutes. And for anyone that has just joined us, in order to join in the brainstorming session, please, can you click on the link in the chat? And we're going to take a couple of minutes. I'm going to actually allow 3 minutes for the newcomers just to get familiar with the tool and start adding your ideas about what you would be saving for. And if you are comfortable turning on your camera, it would be great to see you. It will make for a more friendly feeling that we are actually in the same room, which we know we aren't. Okay, great. I can see that everyone has put in some excellent ideas. Is there anyone that hasn't managed to join the map? Adela, I think you and Tessa joined us a little bit late. Are you able to follow? Adela? Could I just check with the couple of people that came in after we'd started that you're able to participate in the group map? You can see it on your screens, and you're able. I can't see you in the participants. So I'm wondering if you're having trouble accessing. Jason? Great. Okay. All right. So everybody that's in the group map has actually voted. So we're going to have a look now and see what the results look like. And I'm going to, again, move you all to this stage. But this time what we're going to do is, just give me a second, I'm going to move you all to this site. You're going to see, this time what we're going to do is we're going to group the different things, because obviously a lot of us have come up with similar ideas, right? And that's exactly what we were expecting.
Maybe, Catherine, if you share your screen so that everyone can see it.
Now I will share my screen again, so just bear with me a second. Right, so you should now all be able to see my screen. It's the same stage that you're all in. And we're going to just very quickly group them. So maybe you could help me by calling out the items that go together. So a big one seems to be house. I'll include deposit for a house in that. Have I missed any of the houses? Okay, so I can see 4 of those.
Yes.
Okay, and what about retirement is obviously a big one that is coming as well. So let's find all the retiring thing. Old age.
I'll put that. Children education.
Okay, let me then start with children's education. Education of children. Children's education, kids' education.
Below?
Yes, below. And
cross
below,
down.
yeah. I think that's it, right?
Education and university, there was another one.
Okay, so I can add to that.
Yeah.
I can add that one afterwards. Group. Where did it go?
I moved.
Well, we'll find out at the end.
Oh, it's on the left, on the bottom left.
Ah, yeah, okay. I think that just moved actually, but let me just add one. Okay, that's good. And then we've got another big one is retirement, right?
Yeah.
So we've got one there, we've got one here. Pension fund.
Just below.
2, 3 below there. Yeah.
Old age pension. And we're going to group those for retirement. Okay, we've got a couple of people that are going to buy a car, either save for a car. Oh, more than one, so we'll put all of those together.
Yeah, Tony.
And I also see children's wedding. And we'll put retirement, and we'll put this into And then we also have a whole series of things that are either leisure items or, so we've got travel a couple of times. And what I suggest is, how about if I put travel and piano together on the basis that they're sort of discretionary items?
لطفي ساعات مدنويين مرات اي مشتري ولا تفاضل
So while you're doing that, I just want to comment, and Hans, we were working on a project in Jordan together where we developed a long-term saving in form of an insurance with a local partner there. And they have mostly women. And actually the one thing that does not appear here is the business part. So the three things that came through were the education of their children, their house, and their business, in terms of what they're saving for. And the funny thing, it did correlate quite a bit with the age, depending on whether the women were before having children, like thinking of the business, and then once they have children, it's more the education of the children in the house. And once the children are a bit bigger, it's also about the business. So the business is not there. I guess that's because all of us, we don't own our own business and don't want to expand it. I don't know.
Yeah, I guess it's, so the one interesting thing for me, so the two questions I've got here, we've got emergencies, so emergency needs a couple of times, but we've also got education, investments, contingencies. Can I put that under emergencies?
Doesn't seem like it's a broad category that includes multiple things is the thing, right? It's got education there, but also, so
I don't know who put it up, but did you put it up, Daniel?
No.
I think what would be interesting would be to understand what investment means, because education we have in another card, and contingencies would be the emergency. So that's more the investment. What is investment meant there?
Well, I would think,
so I think
the car is for business. So I mean, I don't think also travel and so on. I think they don't have that as a priority. I mean, this more consumer-oriented things. So, I mean, the car may most likely for the business to better reach customers or to purchase inputs.
Yeah, so we'll get to that. So in the next stage, what you'll see, we're going to take the things that we might think of as being objectives for long-term savings, and we're going to pick from those ones that we know from our experience would be objectives for MFI clients, and by all means we can add in micro businesses. And there may be others that they would be saving for that we wouldn't be saving for. But someone wanted to say something. I heard a woman's voice. Maybe that was talking about the education, investments, and contingencies.
Yes, actually, it was me writing that in terms of investment, and it was like more thinking about like a small business or further working capital for this small business.
Okay, so that is, I can't add an idea here, but it's to save to have a lump sum, right? To do a business. So let's keep that as a separate category and remember what you said. And then we've got this other one where it's all group: pension fund, big purchases or investments. I'm not, that sort of seems to belong to three categories, so I'm not sure if those three categories are already represented. Then I suggest we leave this idea behind. That's just a suggestion. But right now what I'm going to do is group all of the emergencies and contingencies. Okay, so you can see we've got we have a few, not so many categories now, but still quite a few. So the next thing that we're going to do is we're going to move to a different map. We're going to move all of these ideas into a different map, and we're going to think about how we actually manage to save for these different items. And just bear with me while I bring you into that space.
While you're doing that, Catherine, can I just add to what Gilles was talking about earlier?
Sure.
I've noticed the exact same pattern, which is purpose of saving is very much linked to the life stage of the person you're talking to. Like you can just really predict it, and it's I think not just for us, but just about for anybody. And it can be an important point to consider when you know, launching products, etc., who you market to. But it's you know, I've come across this a lot myself.
I put it actually in the chat box. I think it's important.
Yeah, I think that's a really, really interesting point.
Also, education of children is linked to retirement. So young parents, they also see very much formal education of their children, particularly in sub-Saharan Africa, as one way out of poverty. But also over time, they also change their perception that they can only rely on children. So there's even in 2007 in South Africa, a study on behavioral study also on long-term savings. So then once the education of the children may be secured, then they primarily will think more about also kind of a retirement savings.
Yep.
Okay.
Yeah, what I've actually seen is that as children start entering the age where
I just have an issue.
what I was saying is as sorry,
With my screen having frozen.
Catherine, I think it's your connection. It's sounding a little.
I think that's an interesting.
I see. I think there's an issue with your connection, Catherine.
Yeah, it takes us 1 second to check.
Point. So one was about. It depends though.
Yeah. Mine, the thing happened exactly the same.
Yeah.
Okay, she's coming back in a minute.
Okay, maybe it's worth turning off her video. Maybe it'll just reduce the bandwidth.
Yeah, that's what she was trying, but her computer froze.
Okay. Yeah.
But the same thing happened to me 5 minutes ago. I think it's like an auto thing of Microsoft. You know? They always choose the best moments to update stuff. So yeah.
Yeah. Well, what I was going to say is what I found very interesting is, for example, education. So it's not just savings. Actually, it goes even deeper than that, which is that as children starts reaching an age where education becomes costly, right? So beyond primary school, what I've seen is people actually start sacrificing and pulling back on all of the things to just be able to afford that education. Like that becomes the number one priority. Like I've been in houses where like people are having a leaky roof and there's stuff going on where they clearly need to maintain it. And they said, no, I'm waiting until next year. Then my son will go off to college. And then that's a really interesting thing. So I think it's a very deep point about what's the focus. And I think it's partly what Hans said. There's an expectation of, okay, my kids will get educated. I'll have a better retirement myself. But I think it's deeper than that. I think it's just, you know, like any of us, we want the best for our kids. That's just the human nature.
So when you don't have kids, you don't think of education actually. That's another thing.
I would think, unless it's education for yourself and you're very young, but I would think that's mostly the case here.
I think it depends where you are. I mean, I'm kind of almost ashamed to say that, but living in Switzerland and children going to school, like, you know, you can't really pay. It's not like in the US that you pay for education in Switzerland. If you're good at school, you will attend university. So I guess that's not on my radar. I mean, I know it's on my radar from the work because everywhere I travel, that's an issue.
Mhm.
But I suspect in Switzerland we are.
You're absolutely right, and you will see in countries, for example, where, like in most of Europe, people will not like save for medical expenses. But if you look in the US, people absolutely will.
Yeah.
So it just depends on what you can kind of expect from the government. Same thing with pensions. I mean, you get into these issues of, hey, you want to assure yourself of something. Hey, is the government providing it, or is the company I'm working for, if that's the case, is it providing it? So it has a lot to do with what the context is.
Yeah, that's a good statement.
No, I think, yeah, context really matters a lot, especially for most of the people we're talking about, for, who are the target groups of microfinance. There are two issues there. One is most of them are not so lucky to get any support from, government or anybody else, number one. And number two, they deal with so much of uncertainty, even on a day-to-day basis, that, they definitely believe in Keynes that in the long term, we are all dead. And they have a, if we use a financial term, they have a very high discounting rate because the value of the $1 or 1 penny today is so much higher than one value 5 years from today.
Yeah, I agree with this. Long term becomes really difficult. There's another interesting thing I found, and it has to do with the commitment aspect. We're looking. I was involved in a study that was looking at trying to do commitment savings for housing. Housing is very expensive, so it's like one of the biggest expenses you can have. This was in the Philippines, and what was really interesting is, so I was talking to like a group of women, and they were using their group loans to invest in housing. These very same women actually had been introduced and participated in the focus groups in order to do the commitment savings. And as we walked through the amounts of commitment savings to save what they needed for housing were actually a bit less because 30% interest adds a lot to the cost. And what was really interesting is they were basically saying, yeah, well, we know that. We know it's cheaper, but if it's a loan, I know I'm going to pay. If it's savings, I'm not going to be able to save that up. Like they just know the money gets used. So when it gets to really large amounts, I think people have real concerns about being able to aggregate it.
It's quite interesting because what I know from field research in sub-Saharan Africa, particularly for young women, they have quite an important saving goals for housing, and this is just because there is a quite high likelihood that at one time their husband will divorce them, and then they will have leave the housing where of the husband's family, and then they would need also a place to go. So this is extremely an important savings objective for younger women to have an own housing. I mean, if they don't use it yet because they're still in the living and in the housing of their husbands, then it brings extra money as to rent it out. Over.
Should we allow Catherine to take us through what she was trying to achieve out of this?
Yes, just bear with me. I just need a couple of minutes, so do carry on talking. And
so should we carry on talking? Okay.
I got kicked out of the room, or my Zoom collapsed. So.
Okay. Then there was a very important point I wanted to bring in at this discussion, which is the supply side. There are unfortunately, very few safe institutional arrangements which provide for long-term savings to poor people in developing countries where the markets are shallow and governance is weak. So people really, one of the reasons why people prefer some of the informal arrangements is they can trust but verify. They have an annual action audit or something. Whereas in a long-term saving, you keep putting money and you don't know whether you're putting money in a black hole. Either because of inflation, the actual value of what you will get will be much lower than what you actually will need at that time. And secondly, you don't know whether this organization will be around in 5, 10, 15 years time. And even with deposit protection in a number of African and other countries, when the banks fail, the central bank might say that, okay, we have protected your deposit. But for a small saver to actually get hold of that money, the transaction cost and the hassle and the stress is so high. So there are lots of supply side issues. And somebody right at the beginning said that, that's why a lot of poor people make savings in non-monetary terms rather than monetary terms, because, they just don't trust the monetary system long enough.
You want something tangible that you can see.
Yeah,
I'm sure
that you
that's
can
true
touch
for
and
many
feel
of
and,
us as
yeah,
well.
absolutely, right? Absolutely.
Okay, I'm not going to move you all here. So, right, sorry about that. That was trickier than I thought it was going to be. We are actually in the office. We've got like super high-speed internet, so no idea what happened there. But so you should be able to see. Here we go. You should be able to see a kind of a map, right, with the what we had come up with before. And what I'd like to do is I'll add things as you call them out. But if we can go through, we may not go through all of them, but let's start with, for example, the people that put in saving for a car. How would you actually have done that? Like, would that have been saving a little bit from your salary every month, or using a long-term savings account? Maybe it's simplest if we think of actually buying a car. How do most of us buy cars? So we have to save for the deposit. I bought a car this year, so I'm painfully aware of all of these costs. I had to save for the deposit. And then what's the next thing that I had to do?
Ask for a loan.
I had to, get a loan, right? For 5 years. Oops. Would there be any other steps involved with this? I can think of one obvious one that is pertinent for insurance. If I'm getting a loan for a car, what else am I required to have?
Insurance.
Exactly. So, sorry, I'm having keyboard trouble as well. So what about things like children's education? I think that's another interesting thing. And I'm trying to pick on the things that could be most relevant. Car is a simple example, but let's look at some that would be more relevant for MFI clients, but still think about how we would finance those savings. How would we go about accumulating that pot? So maybe if we look at children's education for either those of you that have been in the situation or still are in the situation, or maybe in the situation in the future.
There are education funds that put money aside every month. Education fund.
Okay, so savings over time into a special fund, maybe with a
University fund, something like that.
So maybe that would be a long-term deposit, right? Where in the days when we had interest rates, you got higher interest rates.
Yes, and the bigger the amount I want to save and the longer I have time, I would like to use compound interest. That means I would like to use an investment part of the savings to get there faster.
Okay. So I actually took out a term life insurance.
Life insurance.
You're not sharing your screen anymore, are you?
Oh, but you should be able to see it on your screen.
Ah, okay.
Yeah.
That's all right.
Can you?
See it on, we can see it on the link. Yeah, we can see it on the link.
Yeah.
Okay. Otherwise, I can share my screen.
No, that's all right.
Okay, so basically, I also use term life insurance, which is you pay the premium. I mean, you all know how that works, right? I've always been amazed that it's not used more widely in the developing brilliant. What about retirement? A lot of people mentioned retirement.
Catherine, it's actually existing because we did it in Jordan with Hans, the one with the time life.
Okay, but let's get, we get to this. So we're going to move in about 1 minute, we'll move to the right-hand side, and that's going to be about the microfinance clients, right? But how do you guys save for retirement? If you think about what we've got available.
Put aside something from your salary every month.
Okay, save every month.
Hope that your employer is doing the same. Sometimes you have to bash them to do it.
Okay, we also have social security, right?
Yes.
Some of us more than others. And Hans, you live in Switzerland. What do they do in Switzerland? So they have.
Well, I think, I mean, if we are talking, it's, I think for our work, and our work is not in the north, it's much more important how we offer solutions for informal people who don't have a salary, and then the simplest way is really a life cover bundled on another product, or just taken by a group like a cooperative and so on. And it is that simple that you only, and that we have the experience, you only need two type of information: the average age of the group, and secondly, just the name or national ID number, and that is all. And then it can be just the actual pricing according to either the national mortality statistics, or what is even more interesting, particularly for larger institutions, if they can apply this to the actual mortality of their clients. And usually that may be at a lower risk because they have active poor clients and they have a slightly better average life expectancy or health situation, and thus life expectancy than the average. And that can be done, and then also the risk will be lower. And that is this is the foremost simplest insurance product, and that can be either just as a membership benefit for whatever organization. It can be also used definitely by employers, but it also by financial institution. It can be linked to savings, which is much more interesting than credit, because saving products are long-term, and that also works even in a very underdeveloped financial market like Laos. So I think that is the way forward. Here in the north, it's somehow it lost the interest because of the almost zero interest. It's not an investment part anymore. But I mean, a few years ago, everyone I guess in the north had a life insurance, or more than one. But that is still really very, very little use. We only still have this very limited credit life or credit life plus. But it is so important to link it to savings or just as a membership benefit.
Okay, so this is exactly the point, the end point that I wanted us to get to. So the point was going to be that if you look at all of these things, or nearly all of the things that we are saving for the long term, there is an insurance component, right? And as Hans has just said, in the developing world or in the MFI space, that is very often missing. So I think the one place where we see it is with the bundled products that include some form of life insurance, but of course it's not always for when people are dying. So what I would still like to do is, just as part of this exercise, is if you are an MFI and you have clients and your clients have children, and we start with the children's education, because we know that having to pay school fees it's one of the key burdens, right, that can face these families. So what kind of solutions could exist to help MFI clients rest assured of paying their school fees? And what role could insurance play with that?
If it would be bundled to this saving plan, then in case of inability, either by death or invalidity, although invalidity is always very difficult to handle, then those planned regular saving contributions will come from the insurance, and the parents can be assured that the funding for their child's education is secured, even if such a thing would happen to them, like death or invalidity. So this is a great tool to promote and say, listen to clients, saying this product will help assure your client's education.
So just tell me if I'm writing this down correctly. So this would be to bundle savings with life insurance, offered by the MFI.
Not only life, this can be also in invalidity, because if they are cannot able to work, then they can also not generate the necessary savings to fulfill the saving plan taken out for the education of their child.
And this would be offered by the let me just edit that. Offered by the MFI to its clients as a product or as a benefit, or any other organization.
I think it's always much more affordable, and if it's I would not, okay, you can say it's a compulsory product, but I think it's also a negative interpretation of what really does it mean compulsory. I mean, they could also offer maybe without that. It's clearly important financial education that the clients are aware of, that this is an additional service which comes along to their saving plan. I think that is very important, and that really requires client education, because the concept of formal insurance is not very well understood by most clients, particularly if those with lower formal educational levels or even illiterate clients.
Okay, so and do you know any examples of this, where, like real life examples, where a product like this has been offered specifically for around education? Or is this something that we could work on, promoting and developing and advocating for?
I mean, in essence, that's the thing we've been doing in Jordan. The main issue, though, and I'm not sure we discussed that, but many microfinance are not allowed to take deposits. And so they would need to have a partnership with a bank, and most of the time the banks are not interested in this segment just because the costs of opening is too high. I mean, in Jordan, we found out that to open a saving account with a bank, you need to deposit 250 JD, which no one is going to do. And the problem is that the MFI, there are NGOs, or not even NGOs, but tier 3 or tier 4 MFIs, when you look at sub-Saharan Africa, they can't take deposits. So actually, the only way of doing it is you need to, I mean, the only way we found working together on this with Hans and the SCDF was to create a product that is actually a life coverage that pays at the end. So in a what you call endowment policy. And then if the mother or if the father of the person who's saving is dying, then the amount is paid out either immediately or at the end of the period.
And is that the MFI that takes the policy on behalf of the?
No, so that would be a voluntary product. I mean, you could also do that as a compulsory product, but I mean, there are regulatory issues. MFW has done that actually on the Tadamun parts of the group loans, and also for Syrians, they kind of offering that product on a compulsory basis. So every time you take a loan, you have to take it. but they've negotiated with the insurance company that the people could get the savings 2 years later. And so the main problem though is that the commercial viability of such a product for an insurance company is very low, because in essence you need to think in two curves, like one going up, like the amount when you save for 10 years in an account, the amount that you have at the end is very big. So if you die at the beginning, the amount that the insurance company will have to pay is high, because you have to fill the glass, if you will. So the premium you have to pay at the beginning is higher. So the earlier you would actually get your money out of the fund, the less it's going to be attractive. It's just like, I mean, any annuity business in life insurance is a nightmare, because it's a really long tail business, and the profitability of the business comes really at the end. The mortality, you don't really make profit on the mortality part of the coverage. And because the clients actually take the product for a long time with the mindset of taking it for a long time, but then they have all these emergencies and say, well, actually I have some money there. It's not a lot, but I would like to get it. Like it's killing the financials for the insurance company.
But then from the point of view of the client, so I've got a question. It's something Hans raised right at the beginning, which is, and I think Sequinder said something as well, which was about, in most of the cases that we're talking about, people are used to saving informally or in the tangible objects that they can actually see and understand. And I personally completely get that, because you have some kind of endowment policy that's wrapped with insurance, and maybe there are tax benefits or pension advantages, whatever it is. But you still, at the end of the day, are dependent on what is done with the stock market, and it's not very easy to access your money. So for people with limited resources to be putting money away but not actually be able to see the tangible value, how would insurers or MFIs get around that, assuming that the product was viable?
Yeah, I mean,
Hans, sorry, Hans wanted to say something.
Well, one smart thing is that if basically the MFI buys just a group policy with the underwriter and offer it even and at a free cost and insurance and a life and invalidity cover, which is bundled on the average last three months balances of savings account. So in that way, it's not the regulatory issue of compulsory. It's actually a specific incentive the MFI offers to their clients in order to encourage their saving habit. But at the same time, it is also quite a valuable refinancing source for the MFI. But of course, as Jill said, in the MENA regions, we have the regulatory problem. That, of course, is not in the case of Laos. I'm referring to where the MFI has a deposit mobilization license, and then that is an extremely client-centric product, so that the MFI, as an incentive, offers a life cover. Actually, in that case, is that they get the average, I mean, the balance they get as an extra payout, twice the balance if it's an accidental death, and if it's a natural death, they get a one-time the balance up to savings accounts of 10 million KIP, which is around 1,000 euro. And if it's above that amount, then it's just sealed at that amount, also to encourage particularly small depositors, and that really encourage the savings habit. And but this is also very important to be combined with smart financial education, and at the same time it also helps the MFI to reduce their refinancing costs, because deposits are always it comes at lower cost than refinancing, okay, with particularly with the foreign investors.
Hans, I wonder if you, is there any documentation on the product that you're describing that you could either send by email or put a link into the chat? I think that sounds like a really interesting example. And it also sounds like there's scope for working with regulators to also make
organize it. I could organize it to send links to Facebook. I myself, I don't have it because for political reasons, I don't use Facebook.
And then, Sequinder, you made an interesting point. So it's true that many MFIs can't take deposits. So that would, I think it's only the tier 1 MFIs in many countries, but you've made the point, Sequinder, that they can collect savings and offer insurance on behalf of others. That the key issue is whether the transaction costs are viable for customers and the MFI. Could you speak a little more to that?
Yeah, because we are talking about small premium and small saving collection over long period of time, which means frequent and high transaction costs. So we have to obviously combine digital technology but digital technology by itself will not work unless you sell it as an embedded product. But in which case, many customers actually don't even know that they have this product. For example, I know when I was talking to people in Ghana and a few other countries, these mobile-based insurance was being sold, but many customers did not know that they had insurance. So therefore, the claim ratio was low. But basically, the product was not serving its purpose.
And I guess the way around that is to ensure, if it is an embedded product, that there's constant information flowing to the customers that they've got it.
Yeah, and that was one I was asking yesterday also in terms of embedded versus non-embedded products. Embedded products, you can, as you said yesterday, I agree with you that you can go for scale very quickly, but then that needs to be combined with education and very public display of when the claims are made, so that everybody else through examples, people pick up very quickly. Yeah.
And Gilles, you had some experience of that, didn't you, with Lead Foundation in Egypt, particularly where they started paying the claims out, making a bit of a ceremony.
But that wasn't a saving program. But we made sure that the claims were paid on every day. I mean, we had to wait for the moment where they were disbursing loans every day, and then they would, because you also have some privacy issues, but they would actually ask people to collect their claims at the moment where they were going to disperse loans, because they know people would come anyway on that day. So they just told them to come at that time, and then they would call them while they are waiting in the same room with those who get the loans dispersed. So they would collect the money, and then they engage in conversations with those who take the loan, and kind of they see the money that the other clients have received. This has been quite useful.
Okay, so we're pretty much out of time, and I'd just like to wrap up by pulling together some of the different strands of thought that we've had. So we've seen that we do in all of our own lives use a combination of financial products, including long-term savings, and typically bundled with some form of insurance, very often life insurance, as well as trying to increase how that money that we're putting aside will increase over time, thanks to investment of some kind. So we're all very familiar with that. And we know that the same is true, so some of the needs that we have are shared by people who may be MFI clients, so they would be worried about their children's education, what happens if they die while their children are still young, and so on and so forth. It's been pointed out that not all MFIs can take deposits, so and in some countries they may not be allowed to at all, and where it's a bank deposit where they have to work with the bank, the initial deposit entry level may just be outside of the reach of low-income consumers. However, there are ways around it, and one way that Hans was suggesting was to look at group policies, embedding insurance and savings, long-term savings, with products, with loans that are offered, or having the insurance offered to clients based on the average of the last 3 months of balance, with payouts in the case of disability or death. And so I think there are a variety of things that could be done, and we'd certainly be very interested to keep this conversation going and to see how we as the network can continue to provide both pressure and support to MFIs to think innovatively about offering these kinds of products that could really add significant benefit to their customers' quality of life and to helping them achieve their goals. So I want to thank you all very much. I'm sorry about the slight technical glitch. No idea what happened there. And I hope you'll enjoy the rest of the conference.
Thanks. Goodbye.
Thank you, and have a nice afternoon.
You too.
Thank you. Bye.
Bye-bye.